Let's begin. Number 1. The Casino Chip Shuffle. Vegas, baby, Vegas. Picture this. You walk into a glittering casino, tucks on, fake confidence oozing out of your pores, carrying a suitcase full of cash that smells like crime and regret. You're not James Bond, you're Budget Bond. And you're not saving the world, you're trying to explain $100K of suspicious green paper to the IRS. Enter the Casino Chip Shuffle, a classic trick in the money laundering playbook, where dirty cash walks in and squeaky clean winnings walk out. Here's how it goes. Step 1. You exchange your shady cash for casino chips. Totally normal. Casinos deal in giant cash transactions all the time. Step 2. You gamble a little. Maybe even lose a few hands on purpose. Why? To make your visit look like a real gambling trip, not a money laundering cosplay. Step 3. You cash out what's left in chips and walk out with a casino check or wire transfer. Voila! The casino now gives you paperwork showing that your money came from blackjack, not black market pharmaceuticals. Bonus round? You can even lose 10 to 15% of the money to make it look real. That's not a loss, that's a laundering fee with mood lighting. Back in the day, this was basically a money spa day. Casinos didn't ask questions. Now, they've caught on. If you drop $100 on chips and spend the night loitering around penny slots, compliance officers start sharpening their suspicious activity reports. Still, it worked for a long time, because while banks panic at $50 in cash, casinos just call that Tuesday. Number 2, Smurfing, the ant army of crime. Smurfing. Sounds cute. It's not. This one's named after little blue cartoon workers because it uses an army of small humans doing tiny things to accomplish one massive financial crime. It's like Ocean's 11, except it stars minimum wage volunteers who don't even know they're in a heist movie. Here's the trick. Banks freak out if you deposit more than $10,000 in cash. It triggers reports to the feds. So instead of dumping all your dirty money in one go, you break it into lots of tiny deposits under the radar. Like this, 9 500s into Bank of America, 8 200s into Wells Fargo, $7,100 into a credit union no one's heard of, $587 into an ATM next to a Taco Bell. But here's the genius. Smart Smurfs don't use round numbers. They use weirdly specific ones, like $4,938, so it looks like normal business income, because nothing says legitimate like numbers that confuse you. And you don't do it all yourself. You hire dozens, sometimes hundreds of people to do this for you across cities and states. Some don't even know they're laundering money. Others get paid $100 a pop and think they're in some weird DoorDash for deposits job. The result, a nationally coordinated financial ant colony. But bad news for the Smurf syndicate. Modern banks use AI to detect these funky little patterns. If your name shows up making 7 small deposits at 4 banks in 3 hours while buying 0 tacos, congrats, you've been flagged. Number 3, the laundromat method, washing money the old-fashioned way. Yes, it really involves laundromats. This one's so textbook, it gave money laundering its name. The idea? You run a real, cash-heavy business, like a pizza shop, car wash, strip club, or yes, a laundromat, and use it to mix dirty cash with clean cash until no one can tell the difference. How it works. Let's say your pizza joint made $5,000 last Tuesday, but instead, you report $8,000 in sales. That extra $3K, straight from your illegal side hustle. You mix it in, pay taxes on it, and it now smells like oregano and legitimacy. The trick is subtlety. You can't say your 3-table pizza joint served 800 customers. Keep it realistic. Add 15% fake sales, not 150%. Launder smarter, not louder. The elite players run entire fake ecosystems. The laundromat refers customers to the car wash, which caters food from the pizza place, which gets beauty services from the salon. It's like a criminal LinkedIn for fake revenue. But here's the catch. You still have to run actual businesses. That means real employees, real inspections, real Yelp reviews from Karen. And you better not get too greedy, or your cash-only nail salon in rural Iowa reporting $4 million a year will attract more than just customers. Modern auditors look for crazy high per-customer spending, empty shops with million-dollar earnings, pizza places that sell more Coke than Coca-Cola. Basically, your clean business starts smelling like a Clorox crime scene. Number 4. Layering through wire transfers, the global shell game. Imagine trying to follow a single sock in a dryer during an earthquake. That's what tracing money looks like once it hits the layering stage. This tactic is all about burying dirty money under mountains of legal complexity, international transactions, and paper trails. So confusing, even the IRS needs therapy afterward. Here's how the shell game goes. The money starts in country A, it wires to a business in country B, then hops to an investment account in country C, gets exchanged for crypto in country D, then funneled into a shell company in country E, which is owned by a holding firm in country F. By now, your money's passport has more stamps than your actual one, and the origin is somewhere between who knows and don't ask. Shell companies are the MVPs here. These are ghost companies, paper-only entities with names like Global Synergy Ventures or Alpine Strategic Holdings, designed to sound real while doing absolutely nothing. And the beauty? Each country involved has different laws. So while the money moves in milliseconds, investigators have to send formal cooperation requests, which can take years. Add cryptocurrency to the mix, and you've got digital money flying through privacy coins, tumblers, and decentralized exchanges that treat Know Your Customer, KYC rules like an optional vibe. This isn't just hiding money, it's building a financial funhouse with 15 mirrors and no exits. If your money's ever been through 8 countries, 4 shell firms, 3 crypto swaps, and now sits in an account named Bananaco Holdings Limited, congrats, you've achieved peak financial chaos. Number 5. Trade-based laundering. The invoice shuffle. If laundering cash through casinos and pizza shops feels too pedestrian, let's get international. Trade-based laundering is how you move millions while pretending to sell t-shirts or consulting services that may or may not exist. It's the money laundering equivalent of submitting fake homework at the World Trade Organization. Here's the trick. You over-invoice. Claim a shipment of socks cost $1 million when they were actually $100K. The $900K, that's your dirty money wearing a new cotton disguise. Or you under-invoice. Ship $1 million worth of electronics, bill only $100K, and the buyer sends the rest through sketchy back channels. Bonus points if you try phantom shipments. That's right, you bill $2 million for goods that don't exist at all. You're selling air, or possibly dreams. Other hits include multiple invoicing, billing the same buyer twice for the same thing. Round-tripping, shipping goods to yourself via another country and pretending it's revenue. And the best part? Customs can't inspect everything. Ports move millions of containers a day. You think they're opening that one labeled toilet brushes and hope? Nope. This tactic is so complicated, even legitimate businesses can get dragged into it and not realize they're laundering money. One day you're importing novelty mugs. The next day you're unknowingly part of an international cartel's spreadsheet. So yeah, turns out international shipping isn't just about delays and broken boxes. It's also a great way to sneak $10 million past everyone with an invoice that says miscellaneous plastic parts. Number 6. Real estate washing, from drug money to granite countertops. Real estate, the perfect place to hide a crime under crown molding. Property values are subjective. You can own things anonymously, and no one blinks when you spend $5 million in cash for a condo in Miami Beach. Honestly, that's just called Tuesday. Here's how it works. You buy a house for $200 using dirty money. You put $50K into cosmetic upgrades, or pretend you did. Then you sell it for $300 and say, wow, what a smart investment. That extra profit? Clean as a whistle, baby. Now upgrade that system with shell companies. Company A sells to Company B, then to Company C, all owned by the same person. It's like flipping a house to yourself, but with paperwork that makes it look like you're a real estate genius. Throw in straw buyers, people who put the property in their name while you call the shots, and you've got a full Broadway show of fake ownership. Some straw buyers don't even know they're involved. Others get a cut and pretend they just really love escrow documents. And international markets? Even better. Cities like London, Dubai, or New York are packed with multi-million-dollar apartments owned by anonymous shell companies with zero furniture. You know, for the vibe. Meanwhile, construction laundering kicks it up a notch. We spent $5 million on materials. Reality, you spent $2 million and laundered the rest through imaginary drywall. So next time you drive past a luxury building that's always empty, it might not be a failed investment. It might just be one very stylish piggy bank. Number 7. Shell companies and offshore accounts. The Matryoshka doll maze. You've heard of Russian nesting dolls? This is that, but for crime. Each shell company holds another shell company, which owns another company, which owns a bank account that holds your suspiciously untaxed millions. By the time law enforcement reaches the end, they've forgotten why they started. It's less financial structure, more existential crisis. Here's how the Matryoshka system works. Company A in the Cayman Islands owns Company B in Panama, which owns Company C in Luxembourg, which controls Company D in Singapore, which has a bank account in Dubai. Trying to figure out who actually owns that bank account is like asking, who really controls the Spice Girls? Technically, someone does, but spiritually, no one. These shell companies don't do anything. They exist solely to move money around like it's playing hide-and-seek with international regulators. Their names sound impressive, Global Apex Financial Solutions or Strategic Synergy Holdings, but their actual office is probably a P.O. box next to a sandwich shop. What makes this genius? Every jurisdiction involved has different privacy laws, and none of them are in a hurry to help foreign investigators. You need a separate cooperation request for each layer, and by the time Interpol gets through Layer 3, the money's already vacationing in Switzerland under a new name. Bonus move, circular ownership. That's when Company A owns Company B, which owns Company C, which owns Company A. You know, the corporate equivalent of pointing two mirrors at each other and creating an infinite hallway of confusion. Even forensic accountants have to stare at this mess and go, yup, that's a legal brain knot, we're out. So next time someone says offshore account, just picture a money laundering matryoshka with a passport in each hand and a smirk on its face. Number 8, the blockchain shuffle. Digital, decentralized, and very sneaky. Cryptocurrency. Where the money is real, the names are fake, and the law is still figuring out what the heck is going on. Enter the blockchain shuffle, a dance of digital coins so confusing even Bitcoin is like, what are we doing, guys? The basics. Step 1. Convert your dirty cash into crypto through an exchange that doesn't ask questions. Looking at you 2016. Step 2. Move it between dozens of wallet addresses. Step 3. Toss it into a mixer, a service that jumbles your crypto with others, scrambles it like an egg, then spits it out clean. Each step adds complexity. Each transaction creates a record, but all you see is wallet addresses like 0x7FE9B and no clue who owns them. Even better, privacy coins like Monero or Zcash. These are built to hide everything: sender, receiver, amount, your soul. Investigators looking at Monero transactions might as well be trying to read a book that's been shredded and eaten by a goat. Now let's get spicy. Decentralized exchanges. These platforms let you trade crypto without ID verification. No passport, no email, just vibes and blockchain. And if that's too slow, you can go full crypto NFT laundering, make a terrible piece of art, mint it as an NFT, buy it from yourself for $1 million using a shell company. Boom, I'm not a criminal, I'm an artist. Congratulations, you just laundered money through pixelated frogs. Crypto isn't inherently evil, but for money launderers, it's like giving a fox the keys to the henhouse in a VPN. Number 9. Hawala networks. The invisible internet of cash. Welcome to the shadowy Venmo of the ancient world, Hawala. This system predates banks, survives without wire transfers, and works entirely on trust, which is hilarious considering it's mostly used by people trying not to be trusted. Here's the magic. Person A in New York gives $100 in cash to Broker X. Broker X calls Broker Y in Pakistan. Broker Y hands 100 minus fees to person B. No money crosses borders, just vibes and verbal agreements. The brokers settle debts later through import-export deals or future Hawala swaps. It's like the financial equivalent of, I owe you one, but backed by billion-dollar networks and zero paperwork. There are no banks, no receipts, no KYC, no actual money movement, which makes this system a nightmare for law enforcement and a dream for criminals. Modern Hawala systems now use encrypted messaging, burner phones, and even crypto to coordinate settlements. 1 minute, you're buying pistachios. The next, you've just moved $500,000 disguised as walnuts. Some Hawala brokers don't even know they're laundering, others definitely do. So if someone ever tells you they can move $100K to another country in under 30 minutes for a 2% fee and no questions asked, congratulations, you've just met the Uber Black of underground finance. Number 10, the professional launderers, crime's favorite accountants. Here's a wild thought. Money laundering isn't always done by criminals. Sometimes it's outsourced to people with MBAs. Welcome to the world of professional laundering organizations, the financial services industry for people with really questionable morals and really good suits. These aren't sketchy guys in parking lots. These are legit-looking firms that offer full-service laundering packages. You give them your dirty money. They clean it through their networks of shell companies, real estate projects, crypto portfolios, or trade invoices. You get back clean, documented, tax-paid money, minus a laundering fee, of course. It's like TurboTax, but for cocaine profits. These firms often specialize. Some are real estate experts. Others run fake import-export empires. Some are all in on crypto manipulation. They don't just help you hide the money, they help you invest it. Monetize it. Maybe even use it to buy a yacht with an onboard accountant. Many operate behind legitimate business fronts, an import-export company that never seems to export, a law firm that handles exactly one shady client, a logistics company with 0 trucks. Even better, some of their employees don't even know they're working for criminals. They think they're managing supply chain optimization. In reality, they're optimizing cartel cash flow. These laundering syndicates often work with multiple criminal groups at once. That means your drug money might be getting laundered right alongside someone else's arms trafficking profits. How quaint. It's like WeWork, but for felonies. Number 11, when banks look the other way, the inside job. You might be wondering, how does all this get past billion-dollar financial institutions with compliance departments the size of football teams? Simple. Sometimes the banks are in on it. Welcome to the Inside Job edition of Money Laundering, where your biggest obstacle isn't security software. It's a bored bank employee who's been bribed with a boat. Corrupt insiders can disable transaction monitoring, approve shady accounts, falsify documents, and ignore suspicious activity reports because it's paperwork season and I'm tired. Offshore banks are even worse. Some openly market themselves as privacy-first institutions, which is a polite way of saying we don't snitch. These banks offer numbered accounts, bearer bonds, no documentation policies, and a general don't ask, don't tell vibe. The correspondent banking system also adds chaos. That's when smaller banks use big banks to access global financial systems. So a shady bank in Mysterylandia can move money through JP Morgan or HSBC like it's totally normal. And when regulators get too cozy with these banks because they bring in dollar, You get regulatory capture, where oversight becomes more of a suggestion than a rule. Need proof? Look up the FinCEN files. They showed how major global banks moved trillions in suspicious transactions, all while checking the box that said, yeah, this seems fine. So yeah, sometimes the watchdog is actually the getaway driver. Number 12, the grand finale, why all this actually matters. Okay, deep breath, that was a lot. At this point, your brain might feel like a shell company inside a crypto wallet inside a haunted casino. So here's the point. Money laundering isn't just clever crime trivia. It's the financial bloodstream of global corruption. Dirty money doesn't just sit in a vault petting a cat. It gets used to fund drug empires, human trafficking, terrorism, corrupt regimes, illegal logging, fishing, mining, you name it. Every time dirty money gets cleaned, it props up systems that make the world objectively worse. That's why banks, governments, and regulators spend billions on anti-money laundering systems, including AI software that flags suspicious patterns, global information sharing pacts, laws that require customer verification and reporting. But it's a constant arms race. As detection gets smarter, criminals evolve. As rules tighten, new loopholes open. It's basically whack-a-mole with Excel spreadsheets and extradition treaties. So what can you do? Well, unless you're a financial compliance officer or an Interpol agent, probably not much. But if something smells fishy in a business deal, maybe don't ignore it. That wildly overpriced pizza shop might be laundering more than mozzarella. Anyway, that concludes our tour of how money travels the globe, hides behind 6 companies, reinvents itself as a luxury condo, and reemerges as totally legit profits. Subscribe for more stories that will make your next bank deposit feel suspiciously complicated.